The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone, and welcome to the last webinar of the week here at Nadex. And it's all going to be about trading oil. And it's been a hot topic. It's been in the news. And when I show you the charts, you'll clearly understand why it's been such a hot topic. And I'm going to focus on binaries and knockouts. Now, this is an introductory session. So you're going to learn about binary options and you're going to learn about knockout options, and you're going to get a great overview of the Nadex trading platform and how you can understand these products very easily with our platform and then trade them. And I am going to focus on oil. It's just because it's such a fun, hot topic. By the way, my name is Todd Rich. I run education here at Nadex. And before I jump into this session, I do have some housekeeping items that I would like to take care of first. Namely, the disclaimer. This webinar, as are all of our webinars, are brought to you by our compliance department. And it is important for you to know that trading is at your own risk and that any decisions you make are solely your responsibility. I'd also like to point out that I am going to be using some real world examples in the discussion today. And I need to, because I'm going to be showing you the platform. I don't want you to take anything I say today as a buy or sell recommendation. That is simply not the case. I am simply doing this session for you, for education, and to help people on their trading journey. Now that I've had that up there enough, I would like to just tell you how I'm going to go about today's session. And it is going to be about binary options and knockout options. What are those words? What are those terms? What does that mean? What does that mean to you? And I'm going to couch the entire discussion around oil because it's been such a hot topic lately and because a lot of people have been looking for access to the oil markets and the ability to trade the price of oil. I know that some traditional brokers that have generally had access to the price of oil and oil markets they've had to limit customer access recently because of the monster swings in volatility. Whereas at Nadex, because of the nature of our products and because they are much smaller in size and they are fully collateralized, you've had access to trade the price of oil at Nadex this whole time. And then I am going to be doing this all through example. I find it's much easier if we get into the kitchen and actually show you how you cook. I know it's great when someone gives you a recipe, but then when you step into the kitchen, you actually want to, bake or cook whatever the recipe is. Sometimes you're a little bit a fish out of water and it's out of context. So I find if I just do this all in context, it makes it much easier to understand. And I will spend some time with the new platform and particularly some of our charting tools, because the charting tools when you're trading binaries and knockouts are very helpful. Before I jump over to the platform, there's a couple of things I'd like to mention. One, this is an interactive session. I'm going to repeat that. This is an interactive session. You can go into the questions and please type questions as we go. If I am glazing over something too quickly or you would like additional clarity or color commentary, I've got my colleague Nelson in the background. It's difficult for me to watch the questions as I go. I sort of get into a groove, but please interact with Nelson. He runs our service team and he is an expert and we're here to help. And that's what this slide is about. If you need help, contact us. We've got a phone number. We're always available. Please call us. We want to help. Whatever it is, whether it's more clarity about the products, whether you're having an issue with your account, if you'd like a deeper dive into the platform and you can't find the resources, although we have plenty of resources out there, we've got a team that can help you out. Or you can email them customerservice@nadex.com. And importantly, on this session, please type in questions. Nelson's there. Shoot him a message. Keep him on his toes, keep him alert. All right, I am now going to switch over. So let me start sharing my screen. Let's jump over here. All right, you should be seeing my screen, which is our website. And in fact, I'm mentioning reach out to us, contact us. There are other ways that you can do so. In fact, if you notice down here in the right-hand corner, this is some new functionality that we've launched, but we've got chat functionality. So you can use this chat functionality. In fact, I clicked on it. If later in the week or one evening you want some help, please. We've just launched this, so it's just another way that Nadex is here to support you in your trading. Before I jump into the platform itself, I'd also like to point out some other resources. And it's good to generally take a look at this. I am clicking on the webinars section. When I click on that, you'll see, obviously this session happened yesterday. In fact, I think we're going to be repeating it next week. I think we had a problem with the recording, which is why it hasn't moved yet. But you can see what's coming up. I've out through next week, and I'll be adding, we do several webinars every week, and in fact the last week of the month, you'll see this pop up there very soon. We're going to be doing a virtual education summit. It'll be a concentrated 2-day course. Essentially, day one's going to be basics. Day two is going to be more advanced, some advanced trading topics. We will get into technical analysis on both days. So be on the lookout for that. But we are going to do a 2-day summit, and of course, we'll record everything. And I mention that because if you look at on demand, we do record everything and make it available to you. You can come over to Nadex and check out what we've got up here. If you wanted to get into any one of these topics and you wanted to do a little binge watching of Nadex educational content, it is available to you here. It is also available to you on our YouTube channel. So if you wanted to go to YouTube and look at the Nadex channel and subscribe, you'll see everything that we've got, as well as some other content and educational material that's available. All right, so let's get into binaries and knockouts, particularly around oil. I am going to log into the platform. In fact, I am actually going to click join the beta. Now, I know it's called beta, but this is actually our new trading platform, and it won't be beta for a lot longer. And I like this because it's a much cleaner, simpler, easier experience, and I think you'll like it. So if you're using our old platform, or if you're brand new to Nadex, I would encourage you, use the brand new platform. The other thing I'm going to mention is you can always open a demo account at Nadex. And in fact, you'll notice this is in our demo environment. I am going to be doing everything in demo. That way I can potentially even put on some trades, and you can see how that works and how that is managed in the process. But I want to be clear, this is a demo environment, and even though it replicates live data, you're not going to have the same experience in demo as you would in a live environment where there's a lot of eyeballs and a lot of people trading. A demo is just that. It's a demo environment. And sometimes the data in a demo environment can get a little strange because it's a demo. But I just wanted to kind of call that out because it is a great way for you to, one, learn your way around the platform, and two, maybe hone your skills a little bit and get a little comfortable with it. We find that people who spend some time with demo before going into a live account have a much better experience. So, we want you to have a better experience, and we certainly want to encourage that. All right, now, I mentioned that we're going to talk about oil, binaries, and knockouts. I think we're going to do knockouts first. But quick lay of the land, when you log into the new Nadex platform, you'll notice it's broken into a few sections. If you haven't seen this before, I just like to cover it for people who are brand new, because we get a lot of those folks on these sessions that are brand new to Nadex, and we've had a lot of people coming into our markets. Number one, on the left-hand side, you'll notice this panel, which has all of our products, and it is broken into 3 buckets: binary options, call spreads, and knockouts. Now, just so people aren't confused, we formerly called these touch brackets, but knockouts is the standard industry vernacular. And so we are going to, we don't need to fight it. People know these products as knockouts. We're calling them knockouts. And you'll understand when I get into them why they're called knockouts. It's completely logical, much more intuitive, and easy to understand. The second thing you'll notice is there is a workspace, which is where your charts will show up and your order ticket. And we will get into that in a second. Currently, you can see it's empty. And at the bottom, it's your positions and orders and history. And I'm going to leave that up for most of the time, just so you can see as we do things, you can see how orders go in, if something trades, how it becomes a position, and things of that nature. So I think it helps for you to be able to see that. Now, in each bucket, there are different market classes. So in binary options, we do have equity index products. We've got foreign exchange, currency pairs, events contracts. In fact, if you missed yesterday's session, we are going to be redoing it next week, which talks about our events contracts, GDP, unemployment, non-farm payrolls, and how the economists make a prediction, and you could trade a binary product around those. If you're unfamiliar with that concept, join that session next week. I would encourage it. Commodities, which is where we're going to be spending our time today, because we've got commodity products on metals, uh, agricultural products, and oil and energies. So we're going to get into that. Also, notice that we do have shorter term duration. So these are where there'll be hourly, daily, or weekly contracts. But if you want price action, real price action, fast price action, we do have short term binary products, 5 minutes. What's going to happen in the next 5 minutes? Those are all around foreign exchange currency pairs, highly volatile products, lots of price action, lots of excitement. And we've got 20-minute products. What's going to happen in the next 20 minutes? And those are all around indexes. If you're a little confused by the names on our indexes, these do settle to a futures contract against a future, not to a futures, against the price of a futures contract. So you're actually probably familiar with these. It's just that we don't have the license agreement with the issuer of these to put their names up, but the US Tech 100 is the NASDAQ 100, and it does settle to the NASDAQ 100 index future. The US 500 is the S&P 500, the US small cap is the Russell 2000, and the Wall Street 30 is the Dow Jones Industrial Average, the Dow Jones Industrial 30. And we do have 20-minute products around that. I am going to come back to binaries. I usually start with binaries, but today I'd really like to start with knockouts. And I think mostly because we're going to be talking about oil, and this is a clean way for you to gain exposure to the price of oil in a defined risk reward environment. So notice in knockouts, we do have them in indices, we have them in Forex, and we do have them in commodities. I am going to click on commodities, and you'll notice we've got them for both crude oil and for gold. Now I am going to click the little down arrow for crude oil, and you'll see that we always have 4 knockouts. Now before I tell you what a knockout is, I'm going to show you. So I'm going to just pick one of these knockouts. Here, I'm just going to click on one. It doesn't even matter. And it brings up the chart. And I am now going to click hide on the different products because I can just slide this over. It'll give me a little bit more screen real estate. Now, what is a knockout? A knockout is a product where you can take a directional play on the price of the underlying. So we can trade the price of oil, but each knockout contract has a defined range. Right, with a floor, and this is why I like using our chart because it makes it so easy. You can see a dark blue line at the bottom, which is the floor, and then a ceiling, a dark blue line up above. This is a knockout. Notice that we also on our charts make it very easy for you to see which 4 knockout ranges currently are listed. And that is denoted by these lines on the left-hand side. You can see I'm clicking how you've got 4 different distinct ranges. In fact, let's go ahead and click on this range. And this was actually rather interesting because this one recently touched and knocked out. Here's another range, and notice how they just incrementally go up. Okay. Now, what happens? Um, and what happens if it touches? All right. Now let's actually first talk about what we're. Let's just again, I'm going to pick a range. Let's say I think oil is, and this is just for an example, not a trade recommendation. Let's say I think the price of oil is going to be going down. All right. Now, the reason I'm talking about oil, as you can clearly see, it has been enormously volatile in the last few weeks. I mean, look at this. It was down in the 10 range. If I go back in time, I mean, we can even see when it traded and it spiked, and that made a lot of news when it touched and went through zero. An anomaly that you would think couldn't happen, but it can, mostly because this a futures contract does physically settle and can be physically delivered. And the way the contracts are set up, physical delivery for crude oil happens in Cushing, Oklahoma, and we had a moment in time where there was no more storage capacity. That they had no place to put the oil, and it costs money to store oil. You have to have a physical facility that can store it, that is uh, environmentally sound, is safe. Once you actually have it, you have to insure it. What were to happen if something were to happen to that? So you got to pay for insurance. I mean, it's expensive to store oil, and there was simply no place to put it. So they were paying people essentially to come and take it off their hands because they had more oil coming in. And an odd situation for sure, but as we learned, it can happen. But this is why I'm talking about oil. Clearly, it's been very volatile, and just for argument and for educational purposes, uh, I'm saying, all right, I see the price of oil has rallied from down at $10 a barrel, and now it's up here, and I think, you know what? I think the price of oil is going to go lower. Now, I can take a directional play with a knockout, okay? And it's got a ceiling and a floor, and I can either buy or sell a price level, and I've got distinct knockout levels based upon which direction oil goes. So in this particular example, I'm intentionally picking one where oil's in the middle of the range. Notice here, let's bring this chart down so it's a little easier to see. Notice that the floor is 22.75. Okay, and the ceiling is 27.75. Now, let's talk about both potential scenarios. If I thought the price of oil were going to go lower, I could sell one of these contracts. I want the price to go down. And if you notice, the price that I'm actually buying or selling is the price of a barrel of oil, and it generally, the bid and the ask will be around the current indicative price of oil. And you also see that on the chart. It will be very close. So in this instance, we can see that, I mean, you see it ticking around. The current indicative price of oil is 25.03. And so the levels to buy or sell are right around that. 2501, 2504. I mean, it keeps changing here on me. So what you're actually doing is you're buying or selling a price level. So if I want oil to go lower and I think it's going to go down, I can sell one of these. And when I click on it, you'll notice that I get defined potential maximum profit or maximum loss. Now, what is it that I'm looking to happen here? If I sold oil here at 25.05 is what I currently have in my order ticket, I would want the price of a barrel of oil to go down. And if it went down and touched the floor, so 25.75, all right, so it went the way I wanted it to, I would get knocked out of my trade for for a profit. And I know what my maximum potential profit is before I go in. So if I sold it, let's just actually click on 25. If I sold it right now at 25 and it went down to 22.75, if I traded one of these, I could make $225. If I wanted to trade a bigger size and take more risk, if I traded 5 of these, you can see how the potential profit and loss, now everything got multiplied by 5. All right, I am going to keep it as a one lot just so it makes it clean and easy. Notice that now if I sold this and I wanted it to go down and it touched the lower bracket, I would get knocked out for a profit. However, if I were wrong and oil were to rally and touch 27.75, I would get knocked out and experience maximum loss. So what am I essentially doing? I'm essentially selling oil at a price level, and I have a profit goal that I would like to see if it went my direction. And if it touches that boundary, I recognize my maximum potential profit. It also has essentially a stop loss. What if I'm wrong and it goes the other way and oil were to go up and it hit 27.75? I would get knocked out of the trade. I would experience maximum loss. Now, if oil kept going higher, I couldn't lose anymore. That's it. I took my pain and I got out. However, I do get knocked out. And if oil were to touch it and then come back down, oh well, I got knocked out. And if I really wanted to go short again, I would have had to have sold another one. Because once it gets knocked out, the trade is over. So if it touches one of the boundaries before the contract expires, the trade settles, that's it. You're either stopped for a loss and limiting losses, or you recognize your maximum potential profit. Notice on the order ticket that it also tells you when it expires. All of these contracts on our knockouts start at the beginning of the week. They're weekly contracts. At the end of the week, if for some reason it hasn't touched either boundary and you didn't get knocked out in either direction, it will settle to a price, and your potential profit or loss would be the difference between the price that you bought or sold and the price that it settled at. So now let's just go ahead and do one. I'm going to go ahead and just for fun, let's say I think it's going lower. I'm going to sell one at 25.12 and place the order. All right, and I'm going to get acknowledgement that my order went in. And if you notice, because I was just trying to sell a bid, I don't even have an order anymore. It was immediately executed, and it did trade at 25.12. That was the price. Now again, this is a demo environment. Now, what am I hoping oil does here? I'm hoping oil goes lower. I'm taking a short position on the price of oil, and if it gets down to 22.75, I will be knocked out, and I will potentially make $237 on this one lot. Now, if oil goes higher, I am risking $263 if it goes up to 27.75 and touches. Now, if it settles and it never touches in the next 1 day and 2 hours, and you also notice it's up here on the chart in 1 day and 2 hours when it settles. If it hasn't touched either one of these levels and it's someplace in between, if it's above 25.12, the place that I sold it, I'll lose money, but I know I can't lose any more than the 263. So if it goes up higher, I'll lose some, but I won't have maximum loss. If it settles below 25.12, I will experience some type of profit. And excuse me. Now, I won't get maximum profit unless it gets down to 22.75. I hope that's all very clear. And if you have any questions about that, please, I hope you're typing them into Nelson right now. Now, here's the other interesting thing. Just because there's a settlement or an expiration date associated with the knockout does not mean I need to wait and see what happens. I can trade out of this if I like earlier. So, for instance, I sold one of these at 25.12, and I see it's rallying. Now I can be patient, and maybe I don't want to let it touch the 27.70, I'm just going to have to watch. And if I want to buy it back and say, oh, wow, I'm wrong. Let's say it's trading 27 and I'm like, okay, that was enough pain. If it goes up to 27, I might just buy it back and experience some loss and not wait for it to go 27.75 and experience maximum potential loss. So your opinion can change as time goes on, right? You're allowed to change your opinion. Now, let's say I don't want to wait till 22.75 to take it to buy it back. I can always put a bid below and hope that maybe it trades down. So maybe I don't really think it's going to get down to 22.75, but if it went down to, let's say, 24. All right, let's just say it went down to 24 and I wanted to buy it back and take a partial profit. I can put a limit order in simply by clicking buy, and I'll change my price to make it 23 and a half. Okay, or 23, whatever, 23.72. Okay, I'm picking a random number. I'm just picking a random number. I can if buy this back, I'm already short one, and if I hit place order, I'll get an alert at the top of the screen. Okay, great. And now you'll also notice down in the order section that I am trying to buy one down at 23.72. And if it does trade down to 23.72, I'll buy it back. If somehow that were to happen, you would notice, hey, I would no longer be short one. I bought one back lower. And again, if this thing rallies and it keeps going higher and I want to stop my losses instead of seeing the maximum loss, I can always just buy it back. Okay, so that's trading knockouts. You're really picking a direction. If I think oil's going higher, the price of oil, I buy it. If I think oil is going lower, I sell it. And it's essentially just that easy. The catch with knockouts is that I want to choose a range that I think best fits what I'm trying to do and manages my potential risk and manages my potential reward. If it were to touch one of the boundaries, which is, if it were to touch the floor, it touches that price, I'm out of the trade. So if I bought one, all right, and I thought it was going higher and it touches the floor, I'll be knocked out of the trade. I will have lost, all right, because I bought one and it went down. If I sell one and it goes up, I'll be knocked out for a loss. However, that's just in the event that stops your losses. On the flip side, if I think it's going up and I buy one and it goes up to the upper bracket, I would recognize maximum profit. If I sold one and it went down to the floor, if I sold one. So you can go long or short oil, and you're trading the actual price of the contract. All right, and it's very easy to see. Here's oil 25.08. It's just hovering here. And my bid ask spread is going to be right around that price. Do I think it's going up? I buy. Do I think it's going down? I sell. And I've got limits around my trade that either lock in profits or limit losses in the event that I'm wrong. And again, I can always choose to exit the position early if I want to take the position off either for a partial profit or just a partial loss. Your opinion can always change. Now, the real trick here is choosing that binary range, the knockout range that best suits what you're trying to do. So, here's one where if you thought it was going up and you bought it right now, you've got the floor on this 24.75. It wouldn't have to go down very much for me to be knocked out. So if I thought oil was going up and I wanted to have a very small limited loss potential, I bought one of these. And let's put in a price of 25.14. There's the offer right now. Let's say I bought one here and it went down to 24.75, and it's only, what is that, 38 ticks lower, 38 cents. That's it. 39 cents actually is the actual. I could only lose $39. All right. But if I thought it was going to keep going higher, I've got much more room to the upside for it to go all the way up to 29.75 before I would be knocked out. So you've got to decide how much are you willing to risk, how much are you willing, what kind of reward are you looking for, and how much room do you want to have around your trade. If I thought oil was going up, but I thought maybe if it dipped down, I don't want to get knocked out of the trade here at 24.75. I wanted to give myself a little additional room. Maybe I choose this range, which is a 23.75. Here, I'm risking a little bit more money. I'm giving myself, if it were to drop down, at least, I could stay in the trade a little longer, but my upside would be capped. Because these oil knockouts are always $5 wide, the contract is always can only be worth a maximum of $500. You'll notice that the maximum risk or reward will add up to $500. So the buyer knows exactly what he's getting into. The seller knows exactly what they're getting into. And if you get into a trade, remember, because it's a marketplace, I don't have to go back to that buyer or go back to another. I don't care what they do. Once I've done a trade, I can then go to the marketplace and trade out of it, and it doesn't matter who I'm trading with. All right, I'm either in or I'm out. I'm either long or I'm short, and I make those determinations. So those are knockouts. Now, before I jump away, I would like to show you some really cool tools that we've got. I just picked some. Hey, I think it's going up. Hey, I think it's going down. We've got tools built into our platform to help you do that analysis. And first up are the indicators. I'm going to click on indicators up here, and you'll notice that we've got a bunch of baked in indicators to help you out. So for instance, a lot of people like to trade off of moving average convergence divergence. All right, a MACD. If you don't know what that is, you can always click the little I and you'll get some more information. Or people like to trade off of their own moving averages. I'm going to go ahead and click a moving average, and it's going to bring up 3 moving averages on the chart. All right. And you'll notice that on the chart, it tells me right here, I've got a 20 bar, a 50 bar, and a 100 bar moving average. And these are all going to be based off of, I'm currently using a 1-hour chart. If you wanted to change the interval of the bars, you could certainly do that, and it would populate the chart accordingly. Now I've got 3 moving averages for me to look at. If I wanted to edit those moving averages, I simply click on it and I could change. 20, 50, 100 tends to be a standard, but some people would rather have additional moving averages, or they want to change the settings. You can change any of the settings in our indicators and set it up how you like. Colors, thickness of the lines, all of that. So we do have, let's go ahead and I want to keep the order ticket up here. It's nice to be able to see it in context. But you can take a look at all the different indicators, the indicators that you want, and you could turn them on or off. You like Bollinger Bands, all right, and it'll give you, hey, where would you potentially see some support and resistance based on some standard deviation moves and things of that nature. So again, if you're not certain with any of the whatever these are, we offer it up and help you. All right, we do give you some definitions. The other thing that we've got on our charts, and I'm going to go ahead and turn that off so we don't have too much on the chart all at once, are drawings. Okay, and you can do your drawings, whether it's lines, rectangles, you want to put your own trend lines where you're seeing things where you think you might see support and resistance. A lot of people like to use Fibonacci. If you're not familiar with that, it's a geometric shape that shows up in nature a lot. People try to use it in relationship to the markets, and they'll look for support and resistance and some of these trend lines. And I'm actually just going to fit this a little bit here. Here, I'm going to go ahead and click on it, and let's go ahead and put it in context. So here we have it now with some Fibonacci lines, and it's really rather interesting how it can sort of be true. If you're not familiar with Fibonacci, you can see this dotted line right here was a resistance level at this point, and when it broke through that resistance, right, that actually eventually became a support line. and it's bounced off that line. In fact, the line right above it, it broke through, but then it came back and it acted as resistance, and eventually it did break through. And now you actually might think that this is a support level right here, if you believed in Fibonacci retracement levels. So just it is kind of nice. We've got plenty of tools available to you on our charts, and you can choose how you would like to populate your charts and do your own technical analysis. All right, and I definitely wanted to show that is that we do have these tools to help you on your journey, and actually trading on these products is pretty easy. You want to buy, you click buy, you want to click sell, you click sell. We always give you the maximum potential profit and loss, and with knockouts, you're trading the price of crude oil, and you'll see the indicative price, and you'll notice that generally speaking, and it's not going to be perfect, that the bid ask that you see will revolve around that, but there might be more buyers, there might be more sellers, so the market, tweaks around that a little bit. But you're trading a level, and then you've got distinct ceilings and floors to knock you out. And if you're going long, the floor will knock you out for a stop loss, and the ceiling will knock you out for maximum potential profit. It's the inverse if you're selling. But this is a great way for you to potentially take a directional play on the price of oil in a very defined risk reward environment. All right, the other thing I wanted to get into a little bit today is, we mentioned I was going to do knockouts and binaries, but when we're talking about oil, I think knockouts is a great, easy, intuitive way for you to have limits around your prediction, your speculation. Hey, do I think oil's going higher? Hey, do I think oil's going lower? I can certainly put some constraints around that, and looking for profit goals if I'm right, or stop losses if I'm wrong. And if you touch either one of those boundaries, you are knocked out of the trade. That's why they're called knockouts. That's it. It touches a boundary, it touches the floor, it touches the ceiling, you are knocked out. Now, let's talk a little bit about binary options. And I'm going to click on binary options over here, and I'm going to go down to commodities. And again, I'm going to look at crude oil, and notice that we've got different ranges. Here's a 2-hour trade that actually will be ending in 21 minutes. So you'll probably see quite a bit of volatility. With binaries, you tend to see a lot of volatility as you get closer and closer to the settlement. And that is because, let's actually I'm going to bring up a weekly first, so it's not so crazy. Let's click on the weekly choices for crude oil, and you will notice that there are a bunch of different levels. Okay, a bunch of different prices. I'm going to pick one, and there are bid asks around that. Now the bid ask prices on these are a little different. So I'm going to click on this one and get this out of the way. In fact, I'm going to change my chart so it makes a little bit more sense. It makes it easier for you to read it. Okay, so what are binary contracts? And binaries are simple yes or no questions. Yes or no, will crude oil finish higher than 25.75 at 2:30 p.m. at the end of the week? This is the weekly. So it's got to get up to 25.75, and here's where it would have to be. Now, if I thought it was going to do that, I'm going to go ahead and click on buy. Okay, and you'll notice that the chart populates with a blue shaded area that says, all right, this is where oil would have to finish for this to be true, for this prediction to go in the money. And essentially what you're trading, when you look at these prices, these prices are the probability of that question being true. So right now, the way the market is pricing this, and these contracts are only worth $100. So unlike knockouts where we had $500 wide contracts to give you some room to take a directional play, these are simple $100 contracts, yes or no, and what's the probability of this being true? So with oil right now trading at 25.08, 25.09, you also see the indicative price here. That is well below 25.75. So right now the market is predicting, and if I chose the midpoint between these, it's exactly 24. And so let's actually put 24 in my price ticket. All right. If I thought oil was actually going to settle above 25.75 at the end of the day tomorrow, they're saying there's a 24% probability of that happening. Now, how does that work? On a $100 contract, I am risking $24. All right, that's the most I can lose. That if I think it's going to happen and oil does settle above 25.75 at the end of the day, this contract will go to 100 and I would potentially make $76. 76 plus the 24 is 100. So I'm risking 24 to potentially make 76. And what do I need to happen? It's in the blue area of the chart. I need oil to settle above 25.75. I don't need it to trade above there because it could trade above there. And in fact, if it trades above there, this probability will probably go above 50-50 at that point. And depending upon how much time to expiration, it might go to 70, 80, even closer to 90. I'll show you that on these short-term contracts, but it's the probability. These prices, these probabilities are impacted by two things. One, what's the likelihood of the answer being true, yes or no? And how much time do I have for it to be true, knowing that it has to settle there? So, I mean, if this thing actually settles right at 25.75, that's not above 25.75. This contract will actually settle at zero. If it closes at 25.74, it will be zero. If it settles down at 22, it's zero. But if it settles at 25.76, it's 100. And if it settles at any price higher than 25.76, it's 100. So these are all or nothing, yes or no contracts. Now, again, just because I take a direction on it, does not mean I have to wait and see what happens. I could buy oil right here at 24 because I think it's going to go higher. And maybe at the end of the day, oil rallies up some, and this is trading at 40, 45%. I could always just sell it back out and make $15, $20 by just picking the right direction for a short period of time. But knowing that when I get into the trade, my maximum potential profit and my maximum potential loss are known before I enter the trade. Right. So if I were to buy one of these, in fact, let's go ahead and buy one. All right. This is opposite of what I just did with the knockouts. Let's just go ahead and buy one for $24.50. One, I just bought it. I send the order in. It's a market order, essentially, because notice that I now have a binary option order or position. It's in my positions page, and I have a binary options position that I want oil to finish above 25.75. Okay. Now, could I, if this goes higher, can I sell it for a profit beforehand? Yes. If it goes lower, and you know what, I risked 24.50. Let's say this goes down to 10% or an 8% probability. I was wrong, and now it's not very likely for it to come back. I could just sell it and take a partial loss. So that is really important with both binaries and knockouts. Just because there's an expiration associated with it does not mean I have to wait to expiration to see what happens. And with binaries, there are going to be different probabilities and different levels for you to choose from. The higher it goes, the less likely the probability is to be true. The more in the money, the higher probability it is going to be true. And I do want to remind you, this is a demo environment, so these might not be perfect. But in fact, we could probably jump over to live and you could see how they might vary slightly. But what I did want to show you is how volatile the prices of these can be. So I'm going to click on markets here. And I wanted you to see this. I'm going to go to the 1 p.m. contract, and you'll notice that, these things will trade, the prices on these will tick around pretty quickly because it's either going to be 0 or 100 in the next 14 minutes. In fact, I mean, if you really want to see some price action on binaries, I am going to click on 5 minute, and we'll just take a look at the, at the euro, the US dollar, and you'll see this has only got 3 minutes till expiration. These things change quickly, dramatically. Again, that's because it's either going to be, and let's just take a look and bring up a chart, and I'm going to, um, let's just see if we can see all of the different strikes that are right there. And I'm just trying to adjust the chart so you can kind of see them all, and you can see how it will tick around. There we go. We're seeing some more strikes. And this is tricky because I'm using a 1 hour chart. It'd probably be easier if I used a slightly different. But you'll see that the probability, I mean, in this for this particular binary, oops, let's get away from that. Finishing higher than 1081.5, and it's right there. I mean, these prices will swing and change dramatically as the next 2 minutes go on. So if you're looking for some price action, I mean, here we are. It's right at the money. It's a 50-50 proposition. I don't know. And this is either going to go from 50 to 100 or 50 to 0 in the next 2 minutes. So, and again, there, it starts ticking down, and notice how this moved away from 50 very quickly down to 40 as the price of this is, in fact, let's use a 1 minute chart, and it's probably easier to see that as there we go. Now let's pull this chart down. With a 1 minute chart, um, you'll see how quickly these prices will change, how quickly the one up above dropped down to um, less than 10% a likelihood. How this one was 50-50 because it was right there a second ago. Now it's dropping rapidly as the price goes down. And in fact, this one had a 70% probability, and it's actually now I mean, this is crazy. I mean, we're watching this happen. This is now less than 50. This was just 70, and that's because it's either going to go to 100 or 0, and we've only got a minute and 34 seconds to see what happens here. So this helps you understand, and that's why I like to show the binaries last and the 5 minute binaries very last, is because the price action on these can be pretty dramatic. It's a simple probability, yes or no, is this going to be true or not? And it either goes to 100 or it goes to 0. They're all or nothing. And you can trade through these. I mean, wow, look at this. I mean, had we sold this when it's 70, right when I started, I mean, uh, we would have been able to buy it back in less than 2 minutes for a pretty decent profit. I can't tell you which direction this is going to go. I don't know if it's going to keep going lower. I don't know if it's going to bounce off this level. But look at this. I mean, the 108.11 level is now only a 60% probability. So hopefully with that, you got an understanding of knockout options, a directional play with floors and ceilings, binaries, yes or no questions that are either 0 or 100. I did focus mostly, look at that, 23 seconds to go, and everything's over in this contract because no one knows what's going to happen in the next 23 seconds. And that's what happens with these 5 minute short term, lots of price action, and then boom, it's over. But I did focus most of my discussion around crude oil, and that is because the price of oil has been pretty dramatic lately. And here is a way for you, in a very limited risk, limited reward way, whether it's with a binary all or nothing, will oil finish higher than a certain level, yes or no, and it's the probability of that being true, or knockouts, where you're very much trading the price of a barrel of oil, but you're giving yourself a range of where oil can go with a floor and a ceiling, and then you've got a variety. Let's move this away. You've got a variety of different ranges that you can choose from to give you parameters around whether you think it's going up or down, where you would be knocked out either for a profit or for limiting losses. And the other thing I wanted to mention again is we have a variety of tools, indicators, drawings that you can put on your charts to help you in making your decisions. Um, with that, hopefully you've been keeping Nelson busy with questions. I do want to remind you, in fact, I want to bring this up quickly, that there are different ways for you to interact. Let's go ahead and log out and go back to Nadex. That way I can point it out again on the website that you can chat with us. That's a quick, easy way for you always to be able to access help at Nadex. You can use this chat functionality. You simply click on it. It'll load up. You put in your information, and we will get in touch with you. The other way that you can reach out to us is a phone number or an email. And again, we are here to help. Anything we can do to help, be sure to check out the webinar section of our website and keep an eye out for our forthcoming virtual education summit. It'll probably be a Wednesday and a Thursday, 4 hours each day. Again, you don't have to join for all of it, and we will record it and make it all available, but we're going to try to give you more and more educational content to help you along with your trading journey. And with that, I would like to thank you for taking the time to join us today. Hopefully you got a lot out of the session, and I want to wish you all good luck in the markets.